Okay, everyone, I've just started the recording, so I think we'll kick off. Thank you for taking the time to join us at cuEngage this morning. This session focuses on financial crime, the relentless trend, and is led by our very own Ben Roy, Compliance and Data Protection Officer here at Wellington IT. And we're delighted to have our guest speaker, John Laird from AIB UK, who is the Head of Financial Crime Prevention. Just a reminder to keep your mics muted throughout the session. And if you have any questions for Ben or John, just pop them into the chat bar during the session and we'll answer these at the end. Now I'll pass over to Ben to kick off. Ben, if you could just unmute. Thank you.
Thanks, Rebecca. Can you hear me okay there? Yeah.
I can, yeah. Let me just, can everyone just make sure they're on mute there? There we go. Yep. Go ahead, Ben.
All right, yeah, good morning, everyone. And, you know, as Rebecca's already introduced me, I'm Ben Roy, the Compliance and Data Protection Officer here at Wellington. And firstly, thanks for everybody for joining the session. I was told this week about the amount of people that had dialed in and were joining, so hopefully there's plenty to take away from the session. And I do think there will be. You know, as with content here, that's just a summary of what we're going to discuss, but everything's quite topical and it's touching on, you know, the trends and challenges in financial crime and the relentless nature of it, and that's impacting financial organizations of all scale and sizes. And for that reason, I think today's guest speaker adds a lot of value to that discussion. So yeah, before I sort of get into, you know, some of the landscape and context around what Wellington IT are doing around the topic, supposed to help me substantiate this a bit more, I have you know, invited along a friend and former colleague, my ex-boss actually, as Rebecca's announced there, John Laird, the Head of UK Financial Crime Prevention at AIB. So good morning, John. Nice to see you again. I know John's a busy man as well, so I really appreciate him taking the time out to talk to us today. And I think, you know, John's wealth of experience in the space for a pillar Irish bank such as AIB, you know, contributing across the AIB group as well in the UK, across the UK and Ireland, will, I think, provide real perspective as to the challenges and obstacles that a high street bank faces, as well as hopefully sharing some of the robust control measures in place at an operational and compliance level in an organisation like his. But, you know, these stories and challenges he'll share about are, you know, those which credit unions need to be mindful of as well, you know, as products and services diversify. Think back to the, you know, the CU mobile app, for example, as well as the current drive for current accounts, and considering some of the bigger players in the Irish market have recently left and or are leaving in the Bank of Ireland and KBC. So as well as that, you know, the expectations of members will also continue to rise, and here in Wellington we'll hopefully be a part of that journey with you guys and assisting credit unions, you know, meet the needs and expectations of members and regulators. And I think that's quite evident already, you know, given some of the current product offerings and you know, the onboarding of members online, e-signatures. I mentioned the CU mobile app, open banking, you know, the interconnectivity with other financial organizations, decision as a service functionalities. So this is exactly what a high street bank does as well. So and this is the route that we're obviously continue to go down as well. Some interesting developments on the 2023 roadmap as well. So there's definitely a crossover between the banking world and the credit union world. But, you know, for me as well, there brings a bit of the challenge, and without putting a pessimistic spin on things, you know, credit unions will not be exempt to some of the threats that I suppose John's going to lay out. So that's the brief really, and that's what we're going to discuss. And I think there's a plan for a Q&A at the end. So I really would encourage you to submit any questions or comments our way, and pin John while he's here, because he has lots of information to share, I think. So yeah, before I bring John in, I think many of you will have seen some of my communications I've issued over the past 6 to 12 months, which I think directly correspond to this topic. I did a similar webinar back in August, which was focused on fraud really, and providing some insight into the common threat types and things to be mindful of at a credit union level. You know, things like impersonation fraud by phishing, smishing and phishing, account takeovers, and the KYC requirements. Again, these being very transferable across the financial services sector. But since then, I think the Central Bank of Ireland has definitely sort of ramped up its focus on financial crime with different obligations imposed on anybody who's regulated down in Ireland, including credit unions. So, case in point being the changes to the payment statistics return, or PayStats, which was rolled out at the start of the year, which now consolidates the payment transactional data with fraud and financial crime information as well. So that mandating that those submitting the relevant, returns assign fraud typologies to the payment types. So, for example, the mandate there's detail around which payments have been subject to strong customer authentication, and does SCA actually work, and is it preventing fraud? So they're now demanding more granular fraud type information, and broken down by geography, by frequency, by timeliness, really for the purpose of having one consistent flow of data that can be attributed to financial crime across the EU. So really they want to see the big picture and the impact of it. And all that in combination with capturing data on new and excuse me, digital means of making payments, such as mobile and general instant payments and contactless. So I think time will tell on success of that, but it's certainly not going away. And the output of all of that should mean greater oversight and understanding by the regulators, and in turn more policies, and maybe a more stricter, less frictionless rules, which is not always a bad thing if it's preventing money laundering and fraud. Then the other development in this space in the last sort of year or so is the new Ireland Safe Deposit Box Bank Account and Payments Register. So a bit of a mouthful there. So I've called it the ISBAR reporting means. So in short, that's the reporting of accounts with accompanying IBAN numbers and corresponding personal information like name, date of birth, address. Again, this is being driven at an EU level from the European Central Bank and the CBI here locally, which is actually still being held up by a data protection challenge from the Irish regulator there. So it'll be interesting to see the outcome of that GDPR challenge. And for those that maybe aren't aware, this is a bit of a the kickback is due to the provision of address information as part of this return that some believe, and the regulator believes, could be used to sort of profile data subjects and build a picture of different localities and the type of activity that may go on there. So it'll be interesting to see the outcome of that. But it is due to go live at the start of next year, with onboarding for Irish credit unions to begin in early January. So in summary, really two big regulatory developments, both driven by the regulators needing to have more oversight and clarity on financial crime, what's causing it, and how they prevent that. So, I think John will touch on this in a minute, but with the developing EU money laundering regulations as well, I think we could probably hesitantly predict that there will only be more of a focus and need for data at a regulatory level. And I also think it's worth pointing out that a mindset at a government level and then consequently regulatory level has shifted, and global conflict, which John has a couple of examples of, I think will definitely is definitely a contributing factor to that. But the tightening down of money, the flow of money from Western Europe, and the continual integration of that into our local economies here by known Russian oligarchs and the day-to-day money launderer has definitely shifted the dial and increased the scrutiny and responsibility of regulators for them to assume greater control. So from my side, for you guys, I'll continue to engage the central bank locally and the FCA and other regulators to ensure that we're in the front foot with any output that's coming our way. Partnering in this space and learning from experience as well is so important as trends and typologies adapt. That's something that I've picked up that John will probably mention as well. And the last couple of years has only demonstrated that regardless of circumstance, there will be loopholes and opportunities for financial crime to take off and to prosper. During COVID, hikes in scams when people were working from home, spending more time online, or even in the UK, there was a real abuse of the government loan grant schemes by made up businesses, and those were classic trends over over that 2-year period, which I think John might touch on. But it'd be interesting as well to hear how a bank might have changed its risk strategy, and also heightened its need for KYC and knowing exactly who their member or customer is. So that's it from me at the minute, and I want to bring John in, and for him to give a bit of the high street banking perspective, and the challenges and the outlook in this space. So, John, I'll hand over to you.
Okay, thanks very much, Ben. You'll need to excuse me today. I've got a bit of a creaky throat, so I might be hard to listen to. I might be hard to listen to even without the creaky throat. I'm going to give you an overview of financial crime, but just to touch on a couple of things that Ben had said. So this isn't prepared. It's just, we look at credit unions and we look at banks, and sometimes we go, we're poles apart. But some of the problems that Ben called out there really struck a chord with me. SCA, for example, does it work? I'll not give you my answer on that, but what I would suggest is fraudsters are innovative. I don't really think that the regulators thought through actually that SCA might just move fraud in another direction, and I think we're seeing that in the industry. I think we'll continue to see that, but we'll touch on fraud later on. The other thing, and it kind of made the hairs on the back of my neck stand up, is Ben mentioned the fraud report, the payment fraud report. We also have that payment fraud report, and being a retail bank, I have responsibility for doing that for the entire of the UK business, and I can only imagine what pressure and demands that puts on you all, because I know what pressure and demands it puts on me. It doesn't help that the portal is very often down in the UK when you go to submit it, for those of you that have tried to submit it. So look, as Ben said, I'm John Laird, so I'm head of financial crime for AIB UK. So I have a team in Belfast and a team in London. I've worked in retail banking for over 30 years, and I've had a number of roles, both customer facing in the first line, and then more recently in the running a back office team for a subsidiary, and then working in compliance for over 10 years, of which that has all been in financial crime. Though I also ran the compliance monitoring for the UK, so I have a background in assurance. So I am a poacher turned gamekeeper. And what I'm going to do today is give you a little bit of insight. It's not meant to be telling you how to do your job or what you should be doing, but it's from my perspective about what I see are the key matters facing us, and hopefully some of it will strike a chord. So as I said, I have 30 years experience in retail banking, and in that time the change has been vast. I mean, I can remember opening accounts when you didn't take ID and you took a customer's signature, so I go back that long. The regulatory changes that have taken place since 9/11, particularly in the financial crime arena, have been quite dizzying and rapid, and we're seeing that again at the moment with what's happening with Russia and Ukraine. And we can't forget, even though we may be in Ireland or and view ourselves as small operations, that the impacts that have, particularly the regulators and their ask. And as credit unions begin to get more into high risk products like current accounts, those demands ratchet up. It'll be interesting to see. The UK have introduced an economic crime bill that's gone through Parliament. I wait with bated breath to see the secondary legislation and try and pick through what that will mean for our processes. And again, that will be an impact on us. Why is the topic important? Well, look, if we get financial crime wrong and regulator comes in, neither the CBI or the FCA, it's our license to do business that can be taken away. So it's exceptionally important. It takes on many forms. Retail banks and other regulated financial service firms such as credit unions and building societies, I feel, face very similar problems. We all onboard customers, we all onboard retail customers. We all have to get the balance between meeting our regulatory obligations and at the same time onboarding our customers in an effective and efficient manner, and that is really difficult, that balance. Then we have the question is, once we've onboarded them, then we have the responsibility that we have to monitor them. So we just don't monitor their accounts for fraudulent activity. We have to monitor them for sanctions and PEPs. You may do adverse media as well on some of your customers. And the question that I ask, and I ask myself constantly, is do I have the right balance between what is automated and what is manual? Can we use technology in a better way to free up staff and free up yourselves and give yourselves more time to talk to your customers or your members? Sorry, I will refer to customers probably throughout. I understand you guys have members. And then we have the requirements to identify suspicious activity and report it. But then what do we do with a customer that we identify that suspicious activity on? Do we allow them to continue to operate the account? And this becomes really relevant when you have transactional based current accounts. And there's a real risk that if you allow them to continue to operate, that you end up processing the proceeds of crime. And that, in fact, places a real onus on you and a risk on you as individuals, because that is a criminal offence. And then finally, we have the cost of compliance. As an industry, we need to embrace greater automation of our processes. We also need to understand these, so it's not enough just to have the automation in place, but we need to understand how they work and what are the outputs. And we need to be able to explain what we're doing in this field to our regulators. The FCA touched on this in their DCEO letter that they issued in May 2021, and it made it really clear that if you're using automated process, you need to understand them and you need to explain them, and you need to constantly review that they're effective. It's not enough just to have a system in place. Is it doing what it should be doing? So then, if we look at money laundering and terrorist financing, there's a tagline up there. It's closer to home than you think. And the slides are there, and I'm not going to read through the slides. I'm going to talk to you a wee bit about it. So look, I got to travel on the 7th of June for the first time since COVID, and I was in London and with work. And I had to go through learning how to go through an airport and how to go through security. And after a sort of a long day traveling and a long day in work, I went back to my hotel room in London. And it was around 7 o'clock. Actually, sorry, it was around 8 o'clock. And I got a phone call from one of my staff, and I had a look at the phone, and I'm sitting there going, it's been a long day, I'm tired. Will I take the call or will I not take the call? But probably like the rest of you, when a staff member rings you, you think, I better take the call. So I took the call, and it was one of my staff, and they said, you need to turn on the TV, you need to watch BBC One. There's a programme on. So being a bit of a Luddite, it took me a bit of time, because turned on the TV, BBC One in London is different to BBC One in Belfast, because there's a local news program called Spotlight. Some of you may well know it, and there was a program on called From Russia with Blood, and the program focused on the flow of money between Ireland and Russian organised crime gangs. A wee bit more complicated because you throw Moldova into the mix, and it focused on a number of things. It focused on the use of Northern Ireland limited partnerships for laundering criminal funds. And remember, these companies are set up by local people. They may ultimately be owned and controlled by Russian nationals and Russian criminal gangs, or be used to flow money back out to them. But they're local people, and those local people may well have accounts with us. So I watched the programme with a little bit of fear, and then my mind starts to run whenever I watch, and I tend to keep a notebook by my side, and I tend to write things down. And straight away, my mind was thinking, do I have any Northern Ireland limited partnerships? I haven't come across any. Do we have any in our books? How do I find out? How do I interrogate my system quickly to find out if I have a Northern Ireland limited partnership? Do I search the database the next day? And if I do search the database, what am I going to do practically if I find one? And those are real challenges that we have. So the next day was busy for everybody. I go into work sometimes, and Ben knows this, and he'll probably smile. I go into work, have a good idea, and I create absolute chaos and pandemonium for a couple of days. And I love data. I love information. And Ben and I had a colleague who's particularly good at that. So the next day was busy, but luckily from my perspective, there wasn't anything there, but there could have been. And if there was, then I would need to know what am I going to do? How am I going to deal that? And likewise with yourselves. And just again to impact. So that shows that even in places like Northern Ireland, and with yourselves in ROI, in small villages, you have potentially people who are operating on a multinational scale, and the money needs to flow in and flow out of accounts. And that's where current accounts and deposit accounts that we all hold can be used. So it's really important that we understand that. The world has become a much smaller place, and we need to understand in our local locations what's going on. In January 2020, 7 people were arrested in Northern Ireland. It was the second largest money laundering operation ever held in the UK. Senior detective described it as one of the most significant live investigations into money laundering in the UK, involving 215 million. If you Google Operation Shambhala, you'll find the details on it. It's all in the public domain. There's loads of articles on it. And these people were based in villages in Northern Ireland. There were raids across Northern Ireland, including in Banbridge, where it was being operated out. Not a large town at all, and probably very similar to some of the towns that you guys have your credit unions in and villages. And what they said was the police said those targeted included individuals suspected of high-end money laundering through bank accounts in the UK and internationally. So it wasn't just Northern Ireland. It impacted England. It impacted Spain. It impacted the Republic and several other jurisdictions. The police said during our extensive investigation, we identified that a significant volume of suspected criminal cash was being laundered out of the country through a number of shell companies and bank accounts held in Northern Ireland. So again, you don't think of Northern Ireland as being a centre of international money laundering, but in this case, it was. And we can be fairly certain there'll be other news articles, similar stuff and similar stories. So it does go on. So the point that on that slide where it says it's closer than you think, I really want you to consider that, because it is closer than you think. And we not all need to make sure that as organisations, we're not allowing our accounts to be used for that type of activity. So I'm going to touch very quickly on terrorist financing, and I'm not going to dwell on this. Major difference is the money laundering is all about criminals making money. They have Christmas to pay for, they have Easter to pay for, they have to go out for their drinks on a Saturday night, they have weddings and things to pay for. Terrorist financing tends to be ideological. They tend to be collecting smaller amounts of money. Recent terrorist activities are done in the low thousands of pounds and not the hundreds of thousands of pounds or the millions that you see through traditional money laundering. But just to bring it home for you, in 2017, there was a couple charged with funding terrorism, and it went to the Supreme Court. And the Supreme Court said that the 2 individuals, and they were a mother and father of a child who they sent money to, who got involved with the wrong people, and basically was involved in terrorists, and they were sending him money, not large amounts of money, just £1,000 here, £100 here, that any of us would do for any of our children, I would suggest. And at the Old Bailey, they decided that they could stand trial for breaching Section 17 of the Terrorism Act. And they were charged with sending money overseas for terrorist purposes. In a unanimous judgment from the Supreme Justices, so there's 5 of them sit, they looked at it and it was unanimous. And what they said was, an accused can commit this offence without knowledge or actual suspicion that the money might be used for terrorist purposes. So if you just think about that for a second, they didn't know what their son was necessarily doing with the money, but the mere act of sending them that money meant that they were guilty of an offence. So again, we need to make sure that we have controls in place as organisations, because again, that money had to go through bank accounts or building society accounts, and those people transmitting that money, you could imagine that the likes of the NCA or the FCA or the other regulators take a close interest and ask them lots of questions why you didn't identify it. So again, money laundering and terrorist financing is really important. So I'm going to talk to you a little bit about what we can do to prevent financial crime, and it is a top-down approach. So I'm head of financial crime for AIB UK. So potentially, if things go wrong, it will sit with me. And potentially, if things go wrong, I can end up in jail and I can be subject to fines. So we all are accountable for it. So the important thing and a defence for an organisation is making sure that you have a financial crime framework in place, that you have policies and standards, and that you regularly review these policies and standards and make sure that they're fit for purpose. And that when you identify an issue and your staff identify an issue, that they're empowered and they're confident that they can come to the management of the credit union or the other financial organisation and say, we have a problem here. So we need to talk about it. Then the other thing, and I touched on it a little bit earlier when I talked about technology, it's not just enough to have your processes and policies and procedures and technology in the background are written down. You have a responsibility to make sure that it's actually working. So you need to undertake assurance. So that assurance will differ from organisation to organisation, and some of the assurance that you guys will do will be fairly rudimentary. For larger credit unions, it may be a little bit more in depth, but you need to conduct regular reviews of your policies and procedures and make sure that they're working operationally. You could, have regular audits or take in an external assessor, and again, that can be once every 3 years just to benchmark where you are. And then you need to consider the customer and the product risk and your business strategies. So you need to overlay everything with what you're actually doing. You need to have customer risk assessment in place. Not every customer will present the same risks, and particularly when you come into offering current accounts, you need to understand those customers and the transactions that they're making. And then if you have a customer that's high risk, you need to have processes in place to do enhanced monitoring, to do enhanced due diligence on them. And again, that might be having a look at their account at regular touch points. It may be actually, putting particular scenarios in detection or transaction monitoring in place where transactions over a certain value you look at. Again, it's up to the organisation how they manage that. And then financial crime risks. It's a requirement since the 4th directive that financial crime risks are considered when you're making new products. So if you're offering a new product or a service, you're meant to assess those against the financial crime risks. Again, a little bit more in this space. You need to be aware and responsive to regulatory developments. And at the minute, that's really difficult because certainly both the EU and the UK on the sanctions, we're seeing them issuing policy statements without issuing the regulation. And they tell us what their expectation is, but they actually haven't given us the framework to work to. And again, that comes to things like when they announce the deposit limits, how do you handle those? But we'll touch on that a wee bit when we talk about sanctions. And then here, effective self-assessment to remediate or prevent incidents and data breaches. Data breaches are very closely linked to financial crime because some people will want to withdraw your service just because they can, but other people will do it either to bring down your system so they can mask other activity, or they want your customer data, and that customer data is very valuable. And every time there's a data breach, the clever criminals will look at that data, they will combine it with other data on the same customers, and they will refine lists, and then those lists are used to target your customers. So I don't know if you've ever had a fraud or an incident and you phoned the customer about it, and the customer goes, I don't understand how they knew so much about me. It is a real challenge of making sure that our data is secure. And then the other thing here is, things like we're doing now, having the conversation, talking to within yourselves, not sharing competitive information, or maybe not going as far as sharing names and things. But you might do that in certain instances, because remember, in the UK, you can certainly do a joint SAR. But you may want to talk about what typographies are you seeing. You know, if one of you have an incident, fraud incident, I'll concentrate on that, or you're seeing something on a money laundering trend, you can be pretty sure that some point down the future, the rest of you will have it as well, or you may well have had it and not noticed. So, you know, things like today, having, you know, talking amongst yourselves, forming help groups, and then joining industry. Credit unions are part of Scamwise, a group that Ben would have attended. You know, and again, that's sharing the information with not just banks and building societies, the post offices there, credit unions are there, but actually other groups are there as well. The police are there, the retailers are there, and talking about what we're seeing. It helps you build up a picture, and then it helps you add to your control work, your control framework. So then, you know, other additional prevention techniques that you can put in place. Not sure, Ben, if you can move the slide. Is know your customer. So KYC, the onboarding of our customers is exceptionally important. It's the bedrock. It's getting that information at the start. It's understanding. Again, I make no apologies for labouring current accounts. Current accounts are a high risk account. You know, understanding the expectations, understanding if somebody's getting benefits, understanding what their income is, you know, and recording that within the systems. So actually you can look at the transactions and you can look back and you can say, well, is that in line with the customer activity that I was expecting when I onboarded them? Then, as I touched on earlier, ongoing customer due diligence, you have a responsibility for ongoing monitoring of your customers and making sure that the information is kept up to date. And that will help you as well, making sure that you're monitoring accounts effectively. I don't think it's something that banks do particularly well. They do it at touch points, you know, and it can be difficult with the size of a customer base, but it is key to preventing financial crime. Adequate in-house procedures, policies and internal controls. And as I said to you earlier, it's not just enough to have them. Okay, you need to review them. You need to test their effectiveness. And there's nothing wrong with changing a procedure. We all learn, and as regulation changes, and as you become aware of things, your procedures should be live. Your policies probably will stay relatively static, so your high-level policies and standards, but what you do operationally may change. Transaction monitoring, red flags and triggers, exceptionally important. And you know, you need to look at what if you can automate that, all the better, particularly when you have current accounts. But to do that, again, you need to understand what a normal transaction is for your customers, so you don't get lots of false positives, and you need to recalibrate that, and you need to be nimble in that. You know, you need to be able to respond to threats. It's often seen in the money laundering world, but it's also useful in the fraud prevention world as well. And then finally, staff awareness and training, talking to our staff, having open conversations like we're having today, and sharing our knowledge and our experience, and encouraging our staff to talk about it themselves and to be able to be empowered to bring any issues that they have to the management. And that's really, really important. I'm going to touch briefly on sanctions. I know it's mainly probably customer scanning that you do as opposed to payment scanning. But the sanctions environment has become remarkably complex with Russia and Ukraine. You know, before 20th of February, there probably were around 60, 70 Russian individuals on a sanctions list, and probably about 15 entities. We now have lists that are over 1,300 people long, and you know, we will have matches that we need to discount. And again, it's linked back to the KYC. The more we collect about our customers, the easier it is to discount. You know, our approach, we have to scan payments, we have to scan individuals, we scan multiple lists. So although I'm UK, we also scan the EU lists, we scan the OFAC lists, we scan the UN lists. And then I have a call to make if I had something that hit a EU list, although it's not a regulatory requirement in the UK necessarily to block a payment. I need to consider what that means. I want the payment to go through, so I have to make a decision on whether to block the payment or let it go through. And in this sphere, I'm naturally conservative, so I tend to go for blocking the payment. We'll go out to the customer for more information, but very often they don't know. And then, that makes us unpopular with our customers and with our business colleagues. But the risks in this are too great. And if we go on to the next slide, I'll just throw out, UK diverged from the EU on sanctions, and the UK wanted to have its own sanctions regime. And one of the first things it did when it left Brexit on the 1st of January, it issued a new list. It actually sanctioned more Russian individuals than had previously been on the EU lists, and did some other things. So there was a fear within the EU and the UK that there was going to be divergence, but what we've actually seen is a convergence with Russia and Ukraine. The announcements may be made differently. The legislation may be interpreted slightly different, but what we're seeing is a really joined up approach to that. So when the UK make an announcement, the EU make an announcement, the US make an announcement, Canada, Australia, and Japan didn't really operate sanctions, but they are now. And we're seeing a much more world view of it. And then the importance of this for yourselves and for us is the economic crime bill that's just come in has introduced a strict liability test. So previously you would have had a defense that if you didn't know something was sanctioned, it was a wee bit like that terrorist example I gave earlier. So if you process a payment or you open an account for a sanctioned individual, you can be publicly censured by Ofsted. Okay, so that's the body in the UK that's responsible for sanctions implementation. And they can fine you. Or even if they don't fine you, they can publish a letter that they'll send you telling you you're not happy. And again, from a reputational point of view, that has impacts. And that has impacts on how we operate every day. So again, it's really important to understand what your responsibilities and your accountabilities are. And how you do the screening of customers and what you do, how you discount a false positive, because I imagine most of what I see are false positives, and most of what you will see will be false positives, but we have a regulatory requirement to do it. So how do you deal with that when you do get a match, or you get how do you record that you've discounted that in case anything crops up? All become really important. The legal framework, and the legal framework in Ireland and the UK from a money laundering perspective, and that's where the main legislation lies. It's very similar. Brexit hasn't changed a great deal because the UK implemented the fifth directive, as was implemented in ROI. And the fifth directive, introduced high risk factors, talked about customer due diligence, did some stuff around EU high risk third parties, and issued a list, and there's a UK list on that. The economic crime bill that's been introduced in the UK will make a little bit of divergence, but it'll not be vast because the directives are the key part of the legislation still. So in the UK, we have the Proceeds of Crime Act, we have the Terrorism Act, we have the Economic Crime Bill, which is going to make prosecution easier. There'll be more use of unexplained wealth orders. So an unexplained wealth order is basically the attempt by the NCA to seize assets, and it's an interesting one because it's not, they don't have to prove criminality. It's up to the individual that's served on an unexplained wealth order to be able to explain where they got their wealth from. And if they're not happy, if the NCA aren't happy, they can potentially seize assets. So if we look at as well, there's some other things on the legal framework. Financial Action Task Force is there. It's a global body. Wilsberg Group is a group of the 7 most powerful banks, and they issue some guidance around PEPs and stuff. And these are good sources of information that you can go on, and if you Google them, you can pull down some information. I'm not going to go through them in any detail. I know Ben had talked to you about fraud, and you're probably tired listening to me twitter on for 25 minutes, but I'm going to touch on it very briefly, and actually it's something that we need to be conscious of. I'm going to cover off sort of the main typologies, so we're still seeing purchase, romance, impersonation scams, smishing, phishing, and phishing, and that's all about manipulating a person to do something that they shouldn't, to give them either their bank account details or to make them or to get them to make a payment. Mule accounts. Mule accounts are something that's been an issue for the banks for some time. From my perspective, we're relatively clean because we're not particularly digitalized, so it's still a face-to-face account opening. But in the industry, it is a growing problem. And as you begin to do remote account opening, as you begin to open accounts and current accounts, you need to be really conscious of this, and you need to be thinking, well, how do we identify that? What are the triggers? So, accounts that were open for children that haven't operated in years and then all of a sudden start to operate. And again, you need to think of a mule not just as a young man who we tend to have that perception of, but they can be anybody. I've seen mules as old as 80 and accounts been used. They've been used without really understanding what they're doing, but it's still muling and they're still committing a criminal offence. And if you allow your bank accounts to, your current accounts to be used for that activity, you as well are processing proceeds of crime. Application fraud. Ben touched on B-bills, which was a bounce back loan. So that was a government loan to help with COVID. And the fraud figures on that are eye-watering. We put in a number of controls at the time. You weren't allowed to do a credit check in the UK, but we can do other things. You can make sure that your KYC is up to date. You can make sure that when the application comes in, you're checking against your expectations. But again, application fraud is a very real thing. Use of forged documentation. I can buy you a bank statement, and I can put whatever transactions I want on it, and it'll come on bank-headed paper, proper bank statement paper, and I can get that for about 50 quid. I can then get wage slips and P60s online as well, probably for about 60 or 70 quid. I can go into some pubs in Belfast and I can get you a passport or a driving license probably for around 200 quid. I'll not tell you the pubs, but it is there, it is real, and we do see them. So you need to be aware of your supporting information and what you're looking for. And it's a total package. Just because you have the ID and POA isn't everything. It's about actually the challenge and the conversation and the asking the questions of your customers. Internal fraud, that's by staff members of businesses. It's not by bank staff or credit union staff. We do see that. Check fraud, yes, we still have checks and there still happens. Invoice redirection and email hacks, both at CEOs but also at a personal level, where a payment instruction comes in and you don't check that payment instruction and it goes to a bank account that it shouldn't go to. Social media, WhatsApp scams, TikTok, everything. As soon as a new platform comes out, you can be pretty sure there's something on it. Abuse of power, family members, and customer vulnerability. So my last slide, and again, I do this on presentations that I do internally. I would do this type of thing externally to both community groups and to other groups, and I put a fish on, and Ben's probably smiling because I'm a bit corny, but really the message is when it comes to fraud or financial crime, if you have that bad feeling in your gut, if it looks like a fish and smells like a fish, it normally is a fish. So that's me done, guys. You'll be glad to know. I think, Ben, you're going to cover off this last slide and then take some questions.
Yeah, John, thanks very much. Thought that was brilliant, and just hearing firsthand some of the experiences that your teams have gone through, I think will definitely resonate with a lot of people on the call today, and there's definitely a few things to take away. I just had one more slide here, just on I suppose some of the outlook and some of the focus areas for at government and regulatory level. I think for credit unions, standing out there would be the fact that clearly financial services organisations are there and in scope, but also cash as well, and the protection of it. I know there's been a massive drive at a UK government level on this. I noted some CBI output on it as well. And if you think back to some of the cohorts and the types of people that may still use cash, you could, without dropping people into certain categories, you could have people that are maybe classed as vulnerable, or people that rely on the sort of face-to-face interaction of going to do their banking or going to the credit union and withdrawing cash. They are classic targets for somebody who could be deceived into doing something they weren't aware of, or being scammed. So I think it's great to see that those areas are in focus, and they're still going to be on the agenda for for regulators and governments. So that's probably it. It's obviously great to see that Fish has got another airing there on one of the slides. I know that's pulled out quite regularly, but it's a good one, and I think it's something that people maybe will take away and think, right, okay, maybe what more do we need to do, and does that look right, does it not? What more questions I need to ask before I maybe proceed with what I'm going to do. And some of the other examples are in the day-to-day money launderer. It's not the usual. It's not always the person driving the flashy car and all the jewelry hanging off them and all of that. There are people that go about this every day. Maybe they don't know the extent of what they're involved in, but I think from an organizational perspective, whether it's bank or credit union, and us partnering with credit unions, I think there's a collective responsibility there to continually know the member, know the customer, and challenge if we think it's appropriate to challenge them on what they're doing. So I think that's it. I know there was we don't have, maybe 5-10 minutes, but for some Q&A. But Rebecca, I'm not sure if there's anything that's come in during the session.
There's a couple that have just come in now. So I will read those out. Thanks both for a great presentation, by the way. Firstly, Greg says, many thanks to Ben for getting John to give this great presentation. So thank you very much, Greg. Declan asks, hi John, excellent presentation. Thanks very much. You spoke about the red flags to watch for from an ongoing monitoring perspective. Is there any particular high risk areas or indicators you would recommend to watch for?
Cash. Ben's touched on cash, and it's a really relevant one at the moment. The FCA are doing some work with all the banks that are members of the banking framework. So that's the agreements that we have with the post office, and their concern is particularly around cash transactions. So cash is still about. Sometimes we would get counter staff and concerned because elderly customers, and they will have genuine reasons for having cash. But when you see younger people coming in, or you see accounts that are being reactivated that have largely been dormant, and you're seeing cash go through them, it's those would be the main red flags. Anything that's out of course is a red flag in reality. But if you're checking the source, so if you're looking and you can see it's solicitors check, they have their own requirements as well when they're issuing those. But yeah, cash, anybody trying to lodge a check that's not payable to them, third party lodgements would be the other thing, would be the main red flags I would say for your type of business. Hopefully, Declan, that's answered your question.
Thanks, John. Julie asks, what I'm not too sure who this is for, but whoever wants to take it, it's possibly for you, John. What are your views on ID PAL in terms of its safe tool to use for account opening, the gathering of ID verification? Have you ever seen fraudulent passports getting through the biometric checking, things like that? I
don't use ID PAL, so I can't really comment on an individual vendor. Though what I would say is, we were concerned about a small German challenger bank, myself and a colleague, and I got round their account opening documentation using, because I wanted to see how easy it was to open a bank account. And I was able to get around their systems and controls to open a bank account. So nothing is full safe is what I would say on that. You know, the biometric data, you need to make sure what they're checking. You need to be satisfied what they're checking. Are they just checking that it's a valid number? Are they actually making a call out to check the biometrics? Are they checking to say, yeah, that's a passport? Or are they checking to say, that's John Laird's passport? And they're very different things. And just remember that UK driving licenses don't have biometric data, so that's a manual check if they're doing it.
Okay.
Yeah, John, I think just on that point of come in, I know earlier in the year there was an incident whereby a counterfeit passport was used, and obviously we have that work sort of outsourced to a trusted third party who would screen the biometric image and then feedback a decision, or feedback a refer for further investigation, because we had well, there was about 13 or 14 credit unions had an individual who had presented at all of these different credit unions all over Ireland. So he's clearly used not just a fake passport but also counterfeit proof of address, because they're clearly not local if they've opened one in the south of Ireland and then one up in the border region or whatever. So
yeah, and that's a really good point as well. Sometimes is it that the issuing of the passport has been incorrect, and actually the biometrics and the person actually match the fraudster, the criminal. The passport's genuine. It's just been achieved by a fraudulent manner. So, nothing is full safe. I would suggest nothing is full safe.
Thanks, John. Stephen asks, thanks both for a great presentation. Just on transaction monitoring, particularly for current accounts, what type of triggers and thresholds would you recommend setting?
It all depends. And I'm not avoiding the question. We base thresholds and we'll have them tiered on segments. So on certain things, we will have different limits for students. Our expectation of what we will see in an account will be lower than perhaps somebody who is older and is working. And again, whether it's a high-risk customer or a non-standard customer, and again, having limits specifically maybe on cash is something that you want to consider. And again, they may be relatively modest. And multiple transactions again is something that you want to look at. Are they lodging cash maybe 3 or 4 times a week? It's that type of thing.
Okay, thanks, John. If anyone else has any other questions, give it another minute if you want to type them in. Ben, I'm not sure if you did you have a question or anything, or?
Yeah, I just had one regarding the communication, and John, you touched on earlier on about some of the industry forums and the communication that you guys would have with local law enforcement, with community groups, with retailers. Within a lot of the credit unions that have dialed in will be part of obviously the user group that we have, and there's a lot will flow through that in terms of product development and even queries and general sort of legal and regulatory stuff. Is that something that you would recommend to
absolutely
to continue? Yeah,
we have we have those industry for it, but also we would meet with the local banks. Probably some of you have heard term Chatham House rules. So we'll share information. Sometimes we'll have law enforcement and we'll have them in the first half of the meeting, and then we'll ask them to sling their hook. And then as the banks, we will talk, and we'll talk quite openly, and nothing is attributed to anybody, but it's that sharing of information. It's that sharing of topographies, because somebody has to see it first. There's always a first. I make a bit of a comment that there's no new fraud. It's just a cycle. But we will quite often come away from those meetings or those phone calls with our peers, and it's really important that if you have a group of peers that you share that information, because you will have similar products, you will have similar customers, and then that you share those typologies and you talk about them, and you're quite open about them. And we go back to the office, or I come in, and as I said earlier, I'm a great one for creating work, and I'll come back with something and I'll go, well, that bank is seeing that. Why am I not seeing that? Let's have a look to see if I missed it. Or, we're coming back and maybe we've shared a name of somebody that's high profile and it's popped up, you know, and you'll go back and you'll do a search. But again, that's all done under Chatham House rules and all of that. So yeah, absolutely, you know, intelligence and knowledge is really important. I can't stress the conversations that you guys should be having with each other. And if you have a forum to do that, you know, all the best. You'll get into a rhythm. You know, you know, when you first start, it's always a bit awkward. When new people come into our groups, it's always a little bit, who's a new person? Can we trust them? But actually, as you begin to get into a rhythm and a flow and you get to know each other and you have those conversations, you'll see you'll have common problems. And very often you'll come up with solutions. So it's brilliant. It's great. Can't overestimate it enough.
Thank you.
That's great. Thanks, John. I think that's a real strength of the credit unions too, because you guys all know each other. You all have peers that you can speak to very openly.
I see there's a wee question there. I'm looking ahead about refusing accounts. And yeah, well, we do refuse accounts. I think all the banks refuse accounts, and we'll normally turn them down because if you find and again, I don't know what your systems are, but you're within your rights to refuse an account for anybody, and you know, we would have the conversations if there's information in the public domain. We would tell them that, like, we previously, you know, you've had this issue. Actually, we don't want to operate a bank account for you. They will complain, you know, but actually, it won't make us change our mind on it. You obviously can't tip them off if you're aware of money laundering. You need to be really careful, and there's a balance there. You know, but we just encourage our staff to say, sorry, we will not be opening a bank account for you, or we're not. Sometimes they might have a savings account and we'll allow the savings account to continue, but we won't open a current account. And maybe it's the activity, or it's something they've told us in the conversation that doesn't stack up, or maybe we've identified that they have multiple bank accounts. We would do some searches. You guys probably do automated searches as well, and you can see, you know, they have 7 or 8 bank accounts. Well, why do they want another bank account with me? You know, that in itself. So we would just refuse it, and it is a difficult conversation. You know, but there is no easy way to say, sorry, I don't want your business, other than, sorry, I don't want your business.
Thanks, John. Thanks for that. And Julie just says, thanks, John and Ben, very informative presentation. And thanks, Brenton, for that question about whether they refuse many account holders from opening in the first place. That's all the questions there are. So, and 12 o'clock on the button. So well done, guys. And thanks everyone for your questions. And I just want to say thank you again, John, for joining us. We really, really appreciate it. Great presentation. And thanks, Ben, for organising the session and getting John on board, and for your presentation as well. And finally, thanks everyone for joining. Really appreciate you taking the time. I'll send out a recording of this session later this afternoon, so you have it to refer back to. So thanks everyone.
Cheers. And guys, one last thing. If you ever see something that's an AIB account and you want to know who to talk to, you know, you now have a name.
Oh, that's great.
All right. Cheers.
Thanks.
Thanks, guys.